Hey everyone, and welcome to the Love America Hate Taxes podcast, and welcome back to the ring. Today we go back into the ring, go toe to toe with Congress. They made some big decisions today, so we're gonna kind of walk through that a little bit. Don, you ready?
Yeah, it's hot off the press. We're only 2 hours out from when they did the final vote today. It was 50-50 with the final decision being made by Vice President Vance, which you don't see that happen very often, but this has been, 26 hours, Ryan,
Wow.
of debate.
Mm,
26 hours. It's like I would watch a little bit of it and, go take some medicine for the nausea. So,
yeah,
but anyways, we're back to the fight,
it's
so.
enough to turn anybody's stomach, and I believe they read all 940 pages, line by line.
Yeah, that was Senator Schumer who was trying to make a point. So these poor clerks, I'm sure they're probably rethinking their career decisions now. He had, matter of fact, I woke up, I think about 2 or 3 o'clock in the morning just to kind of see what was going on. There's one clerk sitting there, and there's another clerk over there who's opening and shutting the door. And this guy here is just reading, okay, section one, da 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 da. It's just unfortunate, but it's all theatrics up there.
Mm,
It's just a lot of dog and pony shows.
talk about painful. Got to have endurance to go through that. That's for sure. Well, Don, let's go ahead and get started. So let's talk about the debt ceiling. So the Senate's going pretty big. What's the move here?
Yeah, so, the Senate came out with $5 trillion is
Hmm.
what they wanna raise it up. The House was only $4 trillion, so the Senate's coming out there swinging big,
Wow.
and now someone say, "Well, it's only $1 trillion difference." Well, let's think about what a what $1 trillion is. That's a pretty substantial, and there's a lot of debate. Of course, I listened to a lot of the debate going on, and we heard from some different senators who were making that a huge issue, which it is. I mean, we got almost $37 trillion of debt already, and,
Mhm.
for my kids and grandkids, that's a huge concern. But then there was also that the CBO said that with the economic impact, it could be as little as
Mm,
$600 billion. So we'll have to wait and see because they can only look so far down the road. That's
yeah.
the CBO, the Congressional Budget Office, can only look so far down the road. So what they do know in the next year, it would be about $600 billion. What it's going to look like over the next 10 years is what that's we don't know.
Okay. Well, that's interesting. Let's go into the next thing. So, tips on overtime. Let's talk about the tips on overtime and who's throwing the better punch here as far as that goes.
Yeah, so the House actually came out with really more of an I called it unlimited. The Senate kind of reeled it in a little bit and said, okay, so for those for overtime, you get to deduct an extra 12,500, and then for tips, it's $25,000. And they're really trying to focus it towards the middle class because I think it phases out at about $150,000. The House, it was pretty much unlimited, which quite frankly, I had issue with, and I think this is something that there'll be a compromise on because it could open up for a tremendous abuse. We talked about this in our last podcast show, that we could actually redirect maybe some of our income over to maybe tips
Mm,
when we're in the restaurant business
yep.
and really kind of play the system. And unfortunate that this happens out there, but I think this is good to put some guidelines
Some
on.
guidelines to it. Yeah, absolutely. So, Don, let's talk about this. Let's talk about the standard deduction, permanent versus temporary. What's the story with that?
So the Senate came out with 16,000 for a single taxpayer and 32,000 for a couple, and it's permanent. But I've heard that it's going to be indexed to inflation, whereas the House was temporary. It was going to take us out to 2028.
Mm,
And so the good news is that we have some assurance of what that's going to look like. So
gotcha. Awesome. Now, this is a big one. This has been part of the topic since they brought this into the bill and other places beforehand. But the child tax credit. Who loves the kids more, the House or the Senate?
well, in this case, it's the Senate. They're making it 2,200 as compared to the House's 2,000,
Okay.
and then they have it key tied to the inflation after 2025. So meaning that the versus them having to come back and this become a political because for the last 3 or 4 years, Ryan, we've been dealing with the child tax credit. I mean, we've seen you and I've been involved in some legislation that have both been killed in 24 and then also in 23 because of the child tax credit. So what they're doing is they're pretty much taking the need to have to come back and readdress this by putting a permanent and then adding inflation, then you address some of the issues that come up. So for those who have children, this is huge. $2,200. Maybe you want to go out and have a few more. Um, I don't know about that. I know how expensive those puppies are.
Oh yeah.
But, it's nice to know that, like in your case, you have 3 children. This is a $6,600 tax credit. And to, of course, clarify for everybody, a tax deduction and credit are 2 different things. So if you owed Uncle Sam $10,000, at the end of the year, then you'd use that $6,600 to wipe that out, and you only owe $3,400 as compared to deduction, because it used to be, prior to the Tax Cuts and Jobs Act, you get, deductions or exemptions for your children. This is much more, I call pure, makes it a little bit easier to calculate too.
Okay, nice to know. Well, what about salt deductions? Let's talk about that too.
Ooh, this one here is a hot, hot topic. Now, if you live in the great state of Texas or Florida or Tennessee or places like this that don't have any state income tax, it's less of an issue. Now, you do have property taxes, you have, some other things that go on in those states. But the reality is, when you have an income tax in those higher tax states like California and New York, you throw in the property taxes and stuff, it gets very, very expensive.
I'm
And
sure.
historically, prior to the Tax Cuts and Jobs Act, you could deduct that. Then when TCJA came in, they capped it out at $10,000. So those who were small business owners were enterprising and worked with the states. The legislation came out where we can do a deduction on your state, pardon me, on your federal and your state income tax on your business.
Mm.
So I could deduct. So if let's say I had a $40,000 tax liability deduction that I'm not getting, I could push it over to my small business and deduct it on that side. And that
Mm.
way I got the benefit of it. If you're a W-2 employee, you're pretty much out of luck
Mm.
because you would have that privilege of doing that. So what the government was trying to do, what Congress is trying to do is prevent that from happening. So they're going to put the kibosh on that based upon what I'm understanding and raise it up to $40,000. That was really a compromise because the House initially had come out with a $10,000 again. And before it could come out of the House, they had to move it up to 40,000 or it was never going to pass because you have the GOP and the Dems that are in these high tax states. So that was where the battle was and why it was such a, fine line as far as getting it passed on the House. And then, of course, that would apply to the Senate as well.
Yeah, absolutely. Well, how about seniors? I know that this is a big topic as well. So, how are seniors faring in this fight?
Well, they fared relatively well. The Senate's given them a $6,000 deduction, and it's going to, of course, phase out the higher income earners, which is only right. I mean, there's some high income earners out there that the reality is $6,000 is not going to move the needle. But
Mm.
there are a lot of our retirees out there that live off of Social Security or very little income, and a $6,000 deduction could be very well another $1,200 in their pocket, which could pay for some of these high prescription drugs out there. But, yeah, so ultimately that comes down to the Senate came out with the 6,000, and of course the House was only a $4,000 quote unquote senior bonus.
Okay. All right. Well, let's talk about our main event.
Yes.
Definitely for our business as well, but let's talk about what's happening with the R&D expensing.
Well, I'll tell you, Ryan, I have a great friend who's on the House Ways and Means Committee over at the House. And, back, I believe it was just a few months ago when I was in Texas, I had the privilege of having breakfast with him. And we were talking through this here. And one of the things that I had heard through the grapevine is that they were going to make retroactive R&D if you had $50 million or less in revenue. And so he told me he had not heard that, so evidently didn't come from the House side of it, because when the House came out, they had no retroactivity. They were just making it effective January of this year that you wouldn't have to amortize. So R&D is still being around,
Mm-hmm.
but it was the whole Section 174 amortization, which would require a small business owner or a large business owner to have to amortize it over a 5-year period, which creates excessive taxes. So the Senate came out with the answer to the problems of small business owners who do R&D, and that is if you're under $31 million in revenues, we can go back and amend the returns and free up cash flow because that's really and they really feel strongly enough at the comments I've been reading is that's going to spurn
Mm-hmm.
growth and more R&D and more hiring because when you think about this, I remember you and I spoke at a dental conference out in California, I
Mm-hmm.
believe it was last year. And one of the dental labs came up to me. He said, when we did this, we weren't expecting it. And because of that, we had to pay an extra $300,000 in taxes. So now, and what that means is that, so for example, if you had $1 million of expenses, you're only able to deduct in the first year 10% of that, so
10%.
90,000. So I left over $900,000 that you have to recognize as income, even though you already made the expense. So that at 30%, that's right at, 35%, that's going to put you at 300,000.
Wow.
Now we can go back and amend that return, get the refund back. Now he's got $300,000 back in his pocket or her pocket. What could that do for a small business owner out there? That's
That's
substantial.
that's
Yeah, that's
huge.
huge.
Wow.
So that's number one. And then secondly, for those who did amortize and were over the 31 million, they're going to give them the opportunity to go ahead and accelerate that depreciation. So in other words, if you started the depreciation back in 22 and you did the 10 and so on and so forth, then they're going to allow them to accelerate that back up and take it off in this year.
Wow. That's huge for small
That is
businesses.
really.
That's really nice.
Oh, and then so the one last thing I want to say about that, um, they made want to make it permanent as well. So the House had come out and said that they wanted to make it just temporary, and the Senate came out to make it permanent,
Yeah.
to amortize.
Thank you, Lord.
Yes.
Yeah, I can't take any more of these back and forths with that. Oh my goodness. Yeah, I know that's been a huge part. I know a lot of our clients have just been waiting, hearing all the promises. We've had a couple bills come up in the past that looked hopeful, but ultimately didn't make it to the finish line.
I mean, remember last year
Yeah.
we were at 357 to 70 out of the House. I
Oh,
mean, that's just unheard of.
yes.
I mean, look at this, that's been going on here recently. And 357 to 70, House and is bipartisan, gets over to the Senate and dies because the child tax credit, like we were talking about earlier, was pretty much the nail that sealed that coffin. So fortunately, the Senate redeemed themselves in our eyes and have come back with I feel like a good solution because, when they have to look at the cost of these. So the reality is they've evidently done an analysis, and why 31 million? I have no idea where they
Mm,
come up with 31 million, but for all of our clients and most people who are on here, 31 million is going to be enough for you to be able to do that. So there'll be a lot of a lot of amending returns going on this year.
goodness.
CPAs. One last thing too is if you don't want to amend and you did amortize, of course the CPAs don't have to do the amendments, but if you want to go back and recover that, that's
Mhm.
going to be a key to
No,
that.
absolutely, absolutely. So we just talked about Section 174.
Yep.
Let's talk about Section 179.
Okay.
It's a big brother, I guess.
Yeah, this is huge too for small business owners. I'm telling you, I greatly appreciate, even though you get very frustrated, listen to the dialogue that goes on the whole debate. But the Senate really did come out with a good solution here. And what they did is they made 179, which ultimately is if you go purchase a vehicle, equipment for your business, it's $2.5 million is going to be the amount that you can deduct.
Mm,
And this is going to be indexed to inflation. So again, addressing the issue because what happened at the end of 21 is that this expired. And so what has happened is decreased from 100% to 80% to 60% and so on and so forth.
mhm.
So now this is going to help manufacturers to be able to sell more. They really
Wow.
believe this is going to be a huge push to manufacturing. And there's some other incentives we're not going to go over today, but to bring the manufacturing back to the United States, which has been part of the tariff conversation,
Mhm.
this is going to be a double benefit. You'll be able to buy the equipment to put in your business at $2.5 million deduction maximum. And then of course, the incentives are going to put out there. Now the House came out with a smaller one, $1 million.
1,000,000.
Yeah. That's a huge difference,
Mhm.
and again, most, if you think about manufacturing, 2.5 million compared to $1 million is could be a huge, huge difference to your business.
Absolutely, absolutely. Well, we're getting into the later rounds here, round 9, so let's talk about QBI deduction and how the bill is handling that.
Yeah, so I was intrigued. Matter of fact, I sent my friend a text. I don't understand why the House wanted to raise the QBI. So QBI is qualified business income deduction, which just means that if you are a Schedule C, a sole proprietor, or you're an S corp or a partnership, or what they call a pass-through entity, you whatever you take as your or you show as your K1 or your profit of your business, you can get a 20% deduction of that. So let's say you showed $300,000 as your profit for the year
Mhm.
after payroll and expenses and stuff, you get to deduct another 60,000. Okay, so at 30%, that's an extra $18,000 in tax savings. So the House came out with, okay, let's raise this to 23%. Not really sure again who comes up with these ideas or these numbers, but the Senate came back and said, no, 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 no. We're not going to do that. We're just going to make it 20%, but we're going to make it
Mm,
permanent.
okay.
So again, not having to debate the QBI deduction in the future. I think 20%. If your income goes up, the bigger the deduction. So yeah, absolutely. I think this is a big, big win for the business owners too.
Sometimes sounds like they just put a bunch of uh, percents in a hat, shake it up, and then you're like, you know what? Just take it out, and what do you find? You know,
Yeah.
so
Well, I made a joke about this with retirees. So when you get to, you have to be 59 and a half to be able to take money out of your IRA without penalty. And you have to be 70 and a half. You're mandated to take it out or you get penalized. So who comes up with the 59 and a half and the 70 and a half? So anyways, it's
yeah, there's a
super
method
interesting.
behind it, I'm sure.
Oh yeah, I'm sure.
All right, so this is an interesting one. Employer provided childcare. Let's talk
Yeah.
about that.
This was huge. I mean, again, there's a lot of businesses out there, but they're going to incentivize because one of the issues, you have small children, you
Yeah.
understand childcare is very, very expensive. So what the Senate has come out with is boosting the credit up to $600,000 maximum,
Wow.
meaning covering half the cost and even letting small businesses team up to provide care. So as a small business, we don't have any here in our office that have small children. We do in some of our other offices, but you could provide childcare and get benefit from on your taxes for doing so. So it's going to help a lot of parents out there who struggle with childcare, in particular, like during the summer months. You got to think about this here. The kids are not in school. So who's caring for these children? So I think it's going to incentivize. And this is something I've always said, Ryan, is that tax legislation creates opportunities for other businesses. So if you're in the childcare business, this is gonna be a huge win for you. You
Yeah.
can go out there and be able to go so we just have, Eli Lilly who just put
Mhm.
a big place down, here. That's gonna be a huge opportunity to maybe provide childcare at one of the local,
Yep.
businesses here for their children.
Yeah.
So,
Absolutely. Well, I know this could be helpful to a lot of parents,
yes.
because wondering what you're gonna do with your kids during the summer months is can be stressful. So, awesome. Well, listen, let's talk about this because there's always seems to be some rabbits in the hat or something a card up the sleeve. So, do you expect any last minute surprises, Senate surprises, or anything from the House?
There's a couple things that came up, and that is the 10-year ban on state AI laws. So, artificial intelligence is a hot, hot topic. Even in our office, and, I mean, it's only been around technically for the public is since November of '22, so we're, a little over 2 years into this here, but a lot of states have been talking about putting some AI laws in place, and the challenge you get here is kind of what we see currently. Because I listen to a lot of, podcasts on AI, and that is so for the United States, we have much freer opportunities for utilizing
Yeah.
AI. You go to Europe
Here's
or
bans.
the
Sure.
UK, there's bans, yeah,
Yeah.
there are certain things you
The
cannot
trick.
get access to,
Yeah.
restrictions. So that's what the federal government was trying to prevent is where, we're in North Carolina and you go to Tennessee and you don't have access to certain things in Tennessee as
Sure.
compared to North Carolina. So I think that was the big thing there. And then also, what was a big debate issue, because there's some Medicaid costs, and we didn't cover our Medicaid coverage. We're not covering that in our conversation today because it's not as relevant to small business owners. But one of the issues was rural home hospitals. Sorry,
Okay.
rural hospitals about their concern about the Medicaid costs and how it was going to impact care in the rural areas. So what happened was they agreed for rural hospital fund for $50 billion. So that was, the big thing.
Okay. Well, who do you think has the edge for small businesses? Which one do you think likes small business?
Yeah, I'm gonna give my vote, to the Senate.
To the Senate?
Yeah, even though, like I said, I have a great friend over in the House,
Mm-hmm.
I think in this particular one here and not to say the House didn't make an
Sure.
attempt,
Mm-hmm.
but I felt like their, attempts were minimal, and like my buddy says, it's all comes down to the budget. I mean, what they have to keep within that budget, and so, of course, with the $4 trillion uh, budget as compared to 5 trillion. The Senate does have a little more leeway there, so that when it goes back down to the House, which is who knows? I mean, they want to get it done by the 4th of July, and right now we're on the 1st of July. So could it happen in 3 days? Yeah, I know that the House is on recess, for the 4th of July. I'm sure that they're going to probably call them back in to see if they can knock it out, or they may just say, "You know what? The Senate got it done before the 4th of July. We'll pick it back up, when we get returned back from our recess. But ultimately, I think that they're going to have to say, okay, what's worth fighting over?
Yeah.
If it's a child tax credits, which is always an issue, the R&D I think is safe from that perspective because the small business owners have a great lobby. Evidently, they did a good job over on the Senate side. I believe that's gonna hang tight. A QBI deduction, again, that's a no-brainer because you're just dropping it from 23 to 20. So, all that being said, I think that, there's enough commonality that even if it went to committee,
Mm.
to work out the differences, that it wouldn't be drawn out long. I don't think it's gonna have to go back to the House and back to the Senate or anything like that. I think it's going to, ultimately get done relatively soon.
Gotcha. And just for, we work with a lot of tax planning clients, not just R&D, but tax planning clients. Is there an average you think that this tax bill is gonna help the average American business owner as far as that goes?
Yeah. So, I mean, you hear all kinds of things that if it didn't get fixed,
Mm.
small business owners are going to have a 68% increase in their tax liability. I personally did a tax plan for a client, and I just want to compare in our tax software what it would look like if they do pass or they don't. And just he had a pretty simple income situation. He had his W-2 plus his K-1s or his profit of his business. There's going to be a 40% increase. So he's going to go owing Uncle Sam $100,000 to 140,000. Wow. That's a 40 I mean that's 40 grand's a lot of money when you think about it. So
Well, it'll give, Independence Day a whole new meaning if they voted in by then.
that's yes, that is so true. And I know there's a lot of ceremony and a lot of
Yeah.
thoughts around there, a lot of spinning going on. But I think that's the reason why there's a big push for it. And of course, I mean, it would be truly a miracle for the House to get this agreed upon and voted on by the 4th of July.
Well, might be a Independence Day miracle. We'll see, we'll see.
It's like we had Christmas miracles before, the Christmas story and all these type of things. Why not a 4th of July? I mean,
On the big beautiful bill.
that's right.
Awesome. Any closing statements?
No, I appreciate everyone joining us. We want to get this information out. Like I said, it's hot off the press, just released 2 hours ago. And, but we want to keep you in the know. And, when it comes to, swinging for those savings, we want to be the ones who bring that information to you. Again, reach out to our office if you have any questions at quartermastertax.com. And of course, please tune in to Love America Hate Taxes each and every week as we release more and more information as this gets finalized and signed by President Trump, whether that's the 4th of July or sometime later. We'll get those hard facts back out to you.
Guys, thank you so much for watching. Don't forget to share this on whatever platform you're watching. If you like the content, please share it with friends. And if you have any questions or comments, feel free to email us. Thank you and have a good day.
Thank you very much.